Hello, what are the risks involved in swing trading? There is a chance you could lose your money when you are swing trading. Your money is now insured by the government. So therefore, you need to be careful. And the one way you can lose your money is if the company bankrupt on you, especially if you are holding on to the stocks waiting for that to become positive for you to sell. There is a chance the stock might bankrupt on you. So again, to mitigate that risk, is go to swing trade quality stocks that you know you could invest in long term. You can swing trade it. This year we have two stocks that went through some merger, and they sold this our shares for the price the stock was selling at that time of the sale, and gave us the money they sold it for. And we made some loss on those, so we lock in those losses, and that would be Walgreens. So we purchased it at 7.32 and we reinvested some dividend over the years, and it sold this year for 207 a share. No, for $11.45. Sorry, we bought it at $36 a share. We purchased 20 share and reinvest some dividend, and we purchased in 2023 and it sold for us in 2025 August for 11.45. Therefore we made about 500 loss there, including the dividend that got reinvested. At least we got something out of the trade. But there are instances when the stock will bankrupt, file, I don't know if that's chapter 11 bankruptcy or what, but they'll file bankruptcy, and when they go through the whole process, then your stocks will be worthless. So those are the things you have to take into consideration. If you set stop loss to limit your losses, then if you sell a stock at a loss, you lock in those unrealized losses, then you lose the portion of the money that you lost pretty much. So if you purchase it at a certain price and you sold it at a price lower, the difference between the two is the amount you lose. Though that the risk involved with swing trading, I do not set stop loss. I just let the stock be in my portfolio. If it turns out that I pay a higher price for it because the price dropped, I just let it be in my portfolio until it becomes positive for me to sell it. And the risk that comes with that is some stocks can bankrupt on you, and it does not happen often, but it does happen. And the way I learned from that experience is keep screening those stocks so that I can keep I can better my watch list that I swing trade from, so that I only have stocks that are good stocks that I know that are going to be there for a while, so that they do not bankrupt on me. One. Second, keep improving where I'm buying the stocks so that I do not pay too high a price for it, that I have to wait too long for the stocks to become positive if it goes a little bit lower. So learn, because with our long option insurance strategy, we like to buy at the valley, so be able to determine what that valley line is, because for some growth stocks the valley line can look like a support line supporting the upside wall of the mountain, or that support line can look like the valley line. So be able to distinguish the valley line from the support line supporting the upside wall of the mountain, because sometimes some stock can continue going higher for more than a year. And if you think that is the value line, you buy at it and it pull back, then you'll get stuck in it. That is an example of this stock, and I believe this stock is in the list of stocks we are going to analyze today. In fact, that's the first one. Today is December 12th, 2025, and we are doing the analysis before the market opens. So IRM, we purchased it right there. We have an arrow there. It pull back. We purchase it again. It pull back to this value line and start going up from there. So currently we are negative in both, or probably a little bit positive in this one, but surely negative in this one. But yeah, differentiate the value line from the support line supporting the upside wall of the mountain, and choose where you are comfortable buying. And right now, this is where I want to buy. So those are the two things that I'm trying to work on. Keep improving, better my watch list, and that is a watch list we create to swing trade from for the entire year. And we are working on 2026 watch list, and that is a video I'm recording as well. The playlist will be in the description. And keep polishing that watch list of those stocks to swing trade, and as we keep swing trading them, determine what the value line is for each one of them and where to buy at the value line. Those are the two things we are working on, so that we can limit the risk of losing our money or staying the trade too long before it becomes positive. Because we purchased this one in 2024, a year ago in December, and we are in December. It's close to a year now. I think I purchased it earlier this year in January, and for the entire year we have been negative in it. So I'm trying to limit that, and I'm thinking that I can expect about 3 months being negative in the stock, just in case it pull lower before start going up. I can estimate about 3 months being negative in it before it start going up, and then I can start seeing a positive and keep working on that. So it's not about knowing everything, being perfect before you start, but you start and you keep learning and you keep improving, and start small. Buy one share at per trade, so that you can stretch your small capital to begin with, and then test your strategy with the stocks you are swing trading to see if they are comparable with each other. Because you cannot change the stocks, but you can change your strategy. But if you like the strategy, find the stocks that can work with it. That's the third thing we are working on. When I say that I'm trying to improve my watch list, is to be able to gather those stocks, find those stocks that work well with the strategy we are using, and have them in our watch list, and be able and find where the value line is that we are willing to buy, and analyze our stocks waiting to buy at that value line when it pull back to that value line, and then later determine where to sell it. That's another step as well, where to sell it, so that we do not sell it too early, or we do not overstay in the trade either. So those are steps to work on, and I think it's going to take years of improving. Therefore, it is a journey. So let's enjoy the process. Today, yesterday the price went up. We have the dates on the x-axis from the past to the present, and the price on the y-axis from $0 up. And yesterday the price is green, so that means at the end of the day the price was higher than the price in the morning when the markets open, but it's close to the value line. So therefore, if you like these stocks, you want to buy, you can grab a share today if you want. But remember, it's in touch base with it, and I don't know if it's going to come back. At this point, I'm not trying to wait to see higher lows around the value line before I buy. That's how I did it earlier, most this year. But there are instances that it will pull back. Do you see this one? I see some higher lows there and I purchase it, but it pulled back before start going up from there. So we purchase it somewhere there, and months later is about the same area. So those are things to consider, and I'm just thinking that, if I wanted to buy, when it touch base with the value line and it's not even showing me higher lows, I will get in. Because again, if we want to see higher lows here before we buy it, and let's say we bought it there, will be negative in it here when it pull back down. So for that reason, I just decided that if I'm comfortable buying it at the value line, when it pull back to that value line, I will get in, thinking that it might stay there for a while or go a little bit lower. Therefore, I'm giving it about 3 months that I can expect to see a negative in my account, that trade, that purchase, before I can start seeing positive number going into 2026. That is the plan. But again, because it touch base with it and start going up from there, I feel like it's kind of ready to start going up. So therefore, even though it's doing a sense and came back down, if you want to grab a share, why not? You can grab a share and have in the portfolio and keep an eye on it and learn from that process. So yes, it is a buy today for this one if you are interested in buying. The next one is IT, and we are using maximum daily chart. So IT, today and yesterday the price went up as well, but IT is right there around the value line. We purchased it there, we purchased it last year and sold it there. We purchased it around this support line. You can see it is multiple years long. Those dotted line are years. That is 2025 starting or end of 2024. So we have 2025, 2024, 2023, 2022. We are still seeing this line here. So well in. And so it's easy to think this is a value line. And I bought it there. When it pulled back and started going up, I bought it there. But guess what? It pulled back down to this secondary value line and was wandering there. And it seems to me that I purchased it again there at that value line. So again, it is a buy today because it's around the value line that we like to buy using our long option long swing trading strategy, which consists of buying at the value line and selling it after all-time new high is reached. When you are using maximum chart, you'll be seeing that all-time high price highlighted on it. So, and yesterday the price went up. Because we cannot really see the beginning of those lines, we can go to maximum monthly chart to see it. We have this still line here, giving us that there is a possibility it might try to come down there as well. But that's that. So we can see this line is like 1, 2, 3, 4, 5, 6 years long, but still it's just supporting the mountain it was climbing for 6 years. And now it decided to come down. So, and we bought few more shares there if we have an arrow there. So this is a buy in my opinion today, because again it's at that value line. But keep in mind that there is another line below that it could try to go to. Why not? If it goes there, buying another share is an idea. And just keep in mind that it's over $100 a share for this one. So one more we are going to analyze today is J. So J, we have those two value lines. Yesterday the price went up as well, but right now it's more so around that support line, supporting the upside wall of the mountain that is climbing. and it seems to be going down, but it's nowhere near either one of those two uptrend and passing by the valley of the mountain that we like to buy at. It touched base with one earlier this year though, and we didn't buy it because we don't know if it's going to come down lower. You see, those are the things. When you think, oh, maybe it might come lower and you do not buy, you might miss that entry. And that is the reason why I'm saying, you know what? If it touch base with one of my value line, I can buy a share or so. And if it it turned out to be an early entry and it pull back lower to a secondary value line, if I'm interested in it, I might buy another share again. Whatever number of shares I wanted to buy, especially if I have two value line like that, whatever amount I wanted to allocate to the trade, I can divide it in two, spend some, and if it pull back down, I can spend some. That way, if it does not pull back, it just start going up from there. I spend half the amount that I wanted to spend on that trade, but I still got in the trade. Does that make sense? So in this example, I didn't purchase it. It went and reached all-time new high and pulled back and start going up. It pulled back here, but didn't touch base with this value line. I'm not going to buy it. It went up and seems to be pulling back, even though yesterday the price went up. It seems to be pulling back. We are just going to keep observing it. I want to see a touch base with the value line, and I know that the value line is an area, not just a tiny line, but still, and sometimes it's worth. So this one is not a buy. Sometimes it's worth reviewing your value line you trace to see if you are the one that didn't get it close enough to where you want it. For instance, this one we touch base. Seems to me that this one could well even come all the way here, even all the way here. So sometimes the line moves for some reason, and sometimes you may not have a well touching the value line you wanted to touch it, and when you adjust it, you notice that where you think the stocks is not touching it is close enough, or still is not close. So it is okay to review your line that you trace, that you are willing to buy at, to see if you want to adjust them. One, you are going to be activating them and stretching them as time pass and they are becoming shorter, but at the same time you want to see them to see if they are touching the value lines or the bars that you wanted to touch. So I feel like it didn't come to where just here for me to buy anything, but just keep observing it. Again, there is so many stocks on the watch list that we don't have to try to force our way in, but just say, you know what, we are going to pass and just keep observing it and learn from this. So this is not a buy today, and those are the three stocks we analyzed today. The first two, I feel like they are at the value line that I would want to buy if I didn't have them in my portfolio, but I have them already. That's why they're highlighted here. And the third one is not a buy today. So thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments. And thank you very much for subscribing to our channel. I'm Afiavi, Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. If we want to take a look at our record for both IRM and IT and IT, so we have the two IT that we purchased. It seems to me that I purchased it recently. I have not done that record yet, but This first one last year that we purchased for 552 a share, we sold it in February for 554 a share and made about $1.97 profit there, and that is still a profit. See, so we made $9 profit on the total, pay 8 cents for the fee. So we grow our money by $9 is a profit. Our goal is to make profit per swing trade, every trade to make profit on it. So the second one we purchased it in May this year, and we have now sold it here 445. So when we look at IRM, we purchased the first one earlier this year for 110 a share, the second one 2 months later for 89 a share, and we have not sold any of those two. So those are the risks when it comes to swing trading. You purchase them and the price will fall, but if you're investing in the good stocks, you don't worry about them. You just let them be in your portfolio. They will become positive at some point for you to sell. And as you can see, this first IT we bought in 2024 and sold it in 2025 and made some small profits on it. We didn't sell it at a loss. And there are many stocks I sold this year. I bought them last year. So I have this one, for instance, that I purchased last year in October and sold it in January. Purchased it for 115 a share, sold it for 119 a share, and made $4 profit a share on that one. So, and this is another one that went through a merger as well and sold our stocks for a loss, and we made about $19 loss there as well. So those are the risks you can run into when it comes to swing trading. So thank you so much for your time. We are organizing a small group online workshop where you can practice analyzing stock to see if any stock is well positioned for you to purchase during the week. If you are interested, will you please check our the link in the description, and the next online workshop is tomorrow, December 13, 2025, and is on, you can check it as well on our online store liberdownload.com. For more of our swing trading strategy, will you please check the playlist in the description of this video. Thank you.